Good morning. Welcome back, everyone. We are doing an altcoin video again today. It is TAI USD TARS protocol. If you haven't already, please like the video, subscribe, hit the thumbs up button, share this video with other like-minded individuals. That helps us grow. Greatly appreciated. If you're interested in trading with me live, feel free to join our Discord server. Link to the server is in the description of this video below, alongside all the other affiliate services that I use and recommend that helps this channel grow. So guys, thank you so much. Starting it off, clean TA. I have it on a daily chart because there's not too much history, but I can quickly show you the monthly, or sorry, the weekly. On a weekly, you're obviously in an uptrend. Kind of look like you're putting in a bull flag consolidational support here at 9 cents, and you're already breaking out after squeezing as much price action in these 2 weekly candles, and now you're having a little bit of a breakout to test the breakdown. The resistance is clear over here at around 17.5 cents. So with that known, how do we get into this trade kind of situation? Monthly, okay. So you're getting a little bit of a sell-off right now. So technically this wick is a rejection wick. You have to claim the price action into this wick before you look for price discovery, right? So right now we have our resistance, we have our bottom, we have a top, and we have our consolidation. So going to now lower time frames. Let's do daily first. So with the daily here, you can see this is a very distributive top right here. This right here, here's your head and shoulder. You have a neckline. The neckline measurement was met here. Then you were looking for some kind of accumulation. If I go lower, I can probably find it. Something like this right here. So this is the kind of accumulation I'd be looking for. Just this one dab doesn't count. Quick moves like this always get faded. Okay, so this was a quick short squeeze. Went right back to the breakdown. You could not get back into the wicks, like I was saying, the uh, distributive top, and you sold off again to find support. Now you're confirming this level as support, okay? And that's why you're not breaking down underneath this level, and that's why you're looking for upside. Now what I'm going to do is going to turn on my indicators, or at least my fibs, so you have a little bit more of a guide. I've lowered all the levels on the fibs just for consolidational sake and having like the best RR on our trade situation. So if I was going to take this short over here, I knew that I would be holding the short underneath 20 cents all the way to 12 and a half to take my profit between 12 and a half to 10 and a quarter cents, whatever. And that's basically what we ended up doing. We found some support over here at the low 10 cents, and 10 and 12 cents is the best buying opportunity for you if you are trying to long this. You can see right now we're at 14. We're 2 cents away from possibly coming into that entry. So that's something to look forward to if you do want this asset. You can see that the buyers are very heavily buying right here near the lows. So until the buyers decide to sell, you won't have that like risk of fast downside, because they're all accumulated. Look at all the volume right here. Okay, this volume was all accumulated right here. Yes, you're getting a little bit of a sell-off right now, but I doubt and the volume of the sell-off is not that even not even that like serious yet. But for downside risk, underneath 12 cents, your risk is to 10, okay, which is the low. After that level gets broke, you have to come and entertain this bull flag that got you out of the breakout in the first place. So all this liquidity over here gets to get tapped, right? Underneath that 10.5 cents. And the GP golden pocket is this white wiggling line. Depending on what exchange you're trading on, your levels are going to probably come into this level over here around 7 cents, 7 to 4.5 cents. So this is the level that you need to be prepared for. It might be a wick, it might be a liquidity grab, whatever. If you're looking to get into this asset, I just gave you 3 perfect levels to add. Here's one, 12 whatever. Here's another, 10 whatever. And here's another well, I can give you 4, between 6 and then 4. So if we come under this level and you consolidate like this, you're not confused as to why we're doing this, and then we break out to come test our resistance, and then we come like that in an expanding megaphone fashion. Okay, so that's what I would be looking for in a, I don't know, couple weeks. Right now, the weekly is telling you we wants to go test into this 20 cent area. Do we have that much more? No, we have one more day left in this week. So what you have to do is next week be ready for possible pushback into 12.5 cents. And then if that week, next whole week, we can hold between 10 and 12 cents, the week after, we'll be looking for continuation into 22. I'm just giving it a few days next week to find and base out its support, maybe like until Wednesday. After Wednesday, if we have not lost 12.5 cents, I'd be looking for that upside push. Keep in mind, next week, Wednesday, is FOMC meeting. We have the BTC convention, Trump talking today. There's a lot of bullish factors looking for that upside move. Only thing that I would say is no one is going to tell you this, but if the Fed does not surprise the market with a rate increase on July, what is it, 27th, on Wednesday, more than likely we're going to see a pullback. And all of August might be a downside month. People are all euphoric and stuff, but the market has no reason to reward the Fed by doing nothing. The market will force the Fed to cut if that's the way we were going to go. And the only way they're going to force the Fed to cut is by dumping. Okay? And then once the dump is done and the Fed cuts, you have um, the ability to know that, hey, with Fed cutting, free money policy again, majority of that money from history has shown us it going into equities, right? So that's when you start putting on the risk on again, is after the official cut. You trying to front run stuff, just stop it. It's probably going to burn you in the long run. And yeah, that's what I wanted to say. And the last thing I will point out was uh, the CME that I showed you guys in the last video. Why we did this fancy dump. Here you go. So here's Bitcoin, and Bitcoin is still a danger, okay? Bitcoin is still a danger. Here's this dump we had. All this, all it did was come test into 63, 65, which I already told you guys. So the fear and the panic and the silliness is just ridiculous. Like, people are just ridiculous. Keep in mind, this little level over here, dang, all my drawings have to come on. This is still a gap, okay, between 58 and 60K. If you think this ain't gonna fill, you obviously don't understand how price works on trading in the markets. This inefficiency eventually, whenever, however, will get filled. It's just the way the markets work. I don't know how to explain it to you. You're finding your top right here. Here's your discount. Here's your midline. Look what's going on, guys. Just come on. Come on. Are you really, really, really that blind? Yes, we're looking for breakout, right? After Fed cut. Until then, you're going to consolidate like this and just annoy the hell out of all the over-leveraged traders who are thinking we're going to the moon. That's what I'm going to say about that one. Now, let's go ruin your... Well, this is the only warning. The only questionable one is Bitcoin, okay? Why I was looking for the gap on ETH to fill? Because we didn't have that gap fill for a week right here, this gap. And this is what I was telling you guys on the last video I did, Ordi Swap. Around minute 8, I showed you these gaps for Bitcoin and ETH, and all we did was just completely fill ETH's gap, and now we're ready to consolidate to see where is fair price. So I don't know if you guys want me to show you what happens during gap fills. Here's the gap. Gap filled, consolidate down. Here's the gap. marked up, gap filled, consolidate down. Okay, so here's another gap. Okay, all the way here. We did this full on like long time. We had one gap here, and then in one big candle filled one gap all the way down to the second gap, and then consolidate and up. Do you see the pattern I'm trying to point out here? Here's a gap. Gap filled, consolidate down. Here's a gap. Gap fill, consolidate, okay? Yeah, I mean, this was the only one that actually went sideways. But that was because ETH was around $2,000. I don't know what events were going on at this time, maybe like staking or halvening or whatever the hell. But the gist of what I'm saying is whenever you have a gap, the gap usually gets filled. See, gap down, okay, a gap filled. Consolidate, back gap down. Gap, a gap. Okay, enough of that nonsense. So ETH gap filled. There was one more gap a little bit lower if you look over here around 3,000. So if we come around 3,000, it's a buying opportunity. People thinking this is just gonna up and out of here. Look what happens when you make those tops. You know, you get a little bit of a three-leg down situation. Here's your little top. You got one leg down. You're getting a dead cat bounce right now. We're waiting on Fed and everything. If nothing gets to the point where we want to hear it, if nothing is said that we want to hear, you're going to just consolidate here. And just consolidating in this big triangle is not bearish. It's a bull flag for upside continuation once this, free money policy gets enacted. You have staking, ETF, everything out, right? So we should just be going up. And that's another reason why we're not getting sharp dumps on ETH. It's because of stakers. Bitcoin, people trying to dump Bitcoin, you can see how fast the market moves because there's no liquidity in the order books. There's no spot on the exchanges. Everyone's got it in their hard wallets and they're staking it. So how is this exchange? How are the exchanges even fulfilling the orders? So that's another thing. We dump all day during the session. After the session ends, the price goes right back to where the session started dumping from. Almost like the exchanges are balancing their books at the end of the session, and anyone who trades in the session of the session that they're trying to murder, they're basically OI to be washed out. So be very careful where you're entering in these markets. Be alert of your timing as to, are you entering on like a 4-hour close, a New York session open or close, CME open or close, or are you using levels like, hey, I'm not going to enter unless this level gets tapped. I'm not going to, do this until this liquidity it gets grabbed. Like, what is your edge? Make sure you are using that edge and refining it moving forward because the trading has become more and more difficult, even for me. I have now stopped aiming for larger moves, and now I'm happy with a 1% move in a day. That's good enough for me because market is not where it used to be. Oh, by the way, I am short on Ethereum. I'm fully aware that we can go up and out of there, but I have a short expecting uh, the Fed to just not do anything in July. If they have a surprise cut in July, I will close all my shorts and I will freaking market long everything with you guys. But you can see on a 4-hour time frame, the reason why I'm short is we had the dead cat bounce situation. We're trickling on up into maybe 30-30, and then you can see the volume is absolutely lackluster. So what's going to happen is we're going to come all the way over here, and then a 4-hour close, maybe like lunchtime, you're going to see one market seller come up with this kind of a volume candle, completely taking out the liquidity, probably back to like 3,200-ish, if not under. That's after you do a swing failure pattern of 30-30, like this area here. If you come and poke into this area and you can't hold it and you get a 15-minute candle back down, more than likely you found your local top and you're going to roll over and find the local bottom kind of situation, find support, and then just consolidate. And then once you have grind it out enough, if you see higher lows, you can look for a liquidity grab up, come back down. There's so many consolidational patterns. What I meant to get, the gist of what I'm saying is we're going to consolidate. this was a consolidational level and it was distributional top. Now, this is the first, what do you call it, stop of the drop. This is retesting the breakdown. If you can't get back into this order block and you find a rejection like right here at 3,400, I still won't be surprised. And from 3,400, you could roll right back under. So just be patient and cautious. Trading on the weekend is probably not the best situation for you because the market does wild stuff. I would be cautious as to Monday market opening. Keep in mind it's the last week of the month. Wednesday is FOMC, and it is a payroll Friday, so there will be money in retail's hands to do whatever they want to do. So if anything, guys, if you have any questions or concerns, leave it in the comment section below. If there are any other assets you would like me to cover, please feel free to leave a comment in the comment section and I will get back to you in the next video. Last but not least, if you haven't already, please like, subscribe, press the bell button for notifications so I get these updates as they come out. Feel free to share these videos with other like-minded individuals that are trading. And if you are interested in trading with me live or talking to me and getting an instant response, feel free to join the Discord server. The link to the server is in the description of this video below, alongside all other affiliate services that I use and recommend. Thank you so much for your time. Talk to you soon. Have a great day. Trade safe.